first guest today from BPI is tipping fourth quarter GDP to come in at 3.6%, bringing full year 2025 growth down to 4.6%. That's shy of the median estimates in our latest Business World survey of 18 economists and below the Development Budget Coordination Committee's official growth target range of 5.5% to 6.5%. Well, with us now for more is BPI lead economist June Neri. June, it's good to see you. Thank you so much for joining us. Welcome back to the program.
Great to see you too, Kathy.
Okay, so your 3.6% just came before the revision of 3.9. So do you think that the actual print is going to be a lot worse than your first forecast, or are you keeping it at 3.6% for the fourth quarter?
Keeping it at 3.6%, Kathy. So the range is probably going to be 3.5% to 4%, hopefully.
Hopefully. I mean, that's really a huge word there. What would have to go right or wrong in the data for you to change your mind and maybe say the next 23 minutes when the numbers are out?
Yeah, so maybe it's hard to calculate which portion of 2025 was hit by the disasters in the South. So hopefully some of them have already been accounted for in third quarter. So that could actually help improve the figure. But really, it was a question of execution, given the limited room for the budget, also for the spending agencies to realign the budget. So it will have to happen this year, Kathy. The rest of 2025 is looking to be still slow.
So it was a difficult call to make because you didn't really have the data. Is that correct? So was it more difficult than the third quarter? Or do you think the fourth quarter would be the most difficult of all?
Yes, it's usually more difficult for the fourth quarter, Kathy, because the lag between the real quarter and the announcement is a lot shorter. Whereas the first quarter comes out in May, we get to report very quickly for the fourth quarter before February. So we have very limited leading indicators to use, and it seems that the public construction component of government spending will continue to be the source of the drag.
Right. Did it make it harder to predict and make a call because of the flood control scam?
Yes, Kathy, because there's also the element of the multiplier. So we were computing that if our potential growth is around 5.5% to 6%, just from the cancellation of the flood control projects, it took away around 1.3 percentage points of our growth. So in other words, we should have grown 4.7 in the third quarter, and yet we actually ended up below 4%. So that means that aside from the disasters in the South, there was a negative multiplier arising from government underspending or government cancellation of these projects.
Right, and that negative multiplier really translates to where the jobs go and where
Correct.
Consumers are in their spending. So what do you think is a bigger risk going into this release in, say, about 20 minutes? Is it an upside surprise that raises pressure on the Bangko Sentral to slow the rate cuts? Or is it going to be a downside surprise that reinforces the narrative of below potential growth?
Yeah, well, based on our forecast, it's a downside surprise because the median is a little bit higher, Kathy. So that's what we're expecting, and it's actually consistent with our view that maybe the BSP will be cutting some more this year, even if they're sounding a little bit hawkish. No?
Yeah, interpret that for us. They're sounding a little bit hawkish, but they would cut a lot more. Would they go for 50 on Feb 19?
Yeah,
what do you see?
If the 3.6 that we're predicting actually pans out, then that could lead them to cut in February, even if we have been hearing them say as early as December that they will probably slow down on the rate cuts. No? It's just the number might be so compelling on the growth side, and since inflation is still even below the target of 2 to 4%, then there seems to be a case for another rate cut this February, at least based on the model that the BSP uses this inflation targeting objective. No?
So what kind of a GDP outcome then would justify, say, a 50 basis point cut on February 19th?
First of all, we wouldn't really recommend that because it could look like they're panicking. But for the whole of this year, they could do as much as 50 basis points, Kathy. Again, watching closely whether inflation will remain within target because we really think that growth will continue to disappoint. So this coming May, when the first quarter numbers are reported, most likely than not, Kathy, we will be seeing still a disappointing print. No? Probably not as bad as the third and fourth quarters of 2025, but still well below the potential of the Philippines. And based on the framework of the BSP, if the economy is growing below potential, they should go lower than their neutral rate. No?
Might they make a move on the other lever, the reserve requirement ratio, and make a cut even before February 19th?
They could trigger that as well, Kathy. Although they have done a lot in the last 3 years, no? I think it can be a combination of both. Since one is actually structural in nature, these are requirement ratios, whereas the policy rate is really more of the precise tool that they typically have to use to adjust to the economic data.
Let's talk about the fiscal side then. I mean, if only so much can be done on the monetary side, do you think the fiscal stance is too tight or too loose or about right given today's growth environment?
Yeah, not at all, Kathy. Actually, if you look our spending the national government spending as a share of GDP, my colleagues saw that it's actually the highest in the region at around 22% of GDP. Most other neighbors are already in the 15 to 17% of GDP levels. So in other words, it's really the quality of spending that we need to improve, Kathy. No? So a lot of the last 3 years budget apparently went to some ghost projects. So if we can realign this to education, to build more classrooms, to provide feeding programs so that the malnutrition issue can be addressed, then it will be felt better by the economy, and quantity can actually result, better quantity of growth can actually result from improving the quality of spending.
Well, you talk a lot to corporates and investors, June. Ahead of this GDP release, what are they actually doing? Are they delaying CapEx, shortening the planning horizons, or still leaning into the Philippines' long-term story?
Yes, there are, of course, concerns about expanding in an environment of slowing economic activity, but there are sectors that continue to expand, Kathy, including the energy sector, given the global demand for data centers and the like, our growing population. So the utility sector continues to expand regardless, no? The confidence level that consumers will continue to absorb these services has allowed them to actually engage us further for their funding requirements. So it's not an across the board loss of sentiment, but there has been a noticeable one in the third and fourth quarters, Kathy. In fact, that could be another source of swing in the fourth quarter that we did not see in our leading indicators. If private investments decline, actually, they have been still positive so far this year, then that could be another drag to overall economic growth. But it's a mixed sentiment, Kathy, and really, I think it's important that we get our act together so that investors can, most, if not all investors, start expanding again this year.
Yeah, I hope our stakeholders are listening and getting the act together. But in the meantime, a final comment on gold. That's been reaching like $5,500 per ounce after the Fed held steady. What do you think the impact is on the continued uptrend, and what's that having on Filipinos' propensity to stock up on all things gold? I mean, jewelry, for instance. I mean, these things happen whenever rallies happen in the metal overseas.
Well, for one, it competes with our other asset classes, Kathy. No? So people would rather set aside funds in either U.S. equities or gold instead of keeping it here in the Philippines. So maybe that third quarter bottoming or fourth quarter bottoming of our PSEI was a result of people hedging. Since the local environment was not exactly the perfect environment for investing, people seem to have shifted towards these other asset classes. So again, if we can improve our quality of spending, if our
Oh, I think we lost June there. And I was just going to say they look like chocolate gold bars. They didn't look like real gold. Thank you so much, June. June Neri of the BPI.